Hey everyone, welcome back to the FluxFolio Finance Channel, your go-to source for breaking down the biggest financial battles shaping the global economy. We're continuing our deep dive into the U.S. China trade war, and if you've been following along, you know we've been unpacking the strategies, stakes, and global impacts of this economic showdown. In our previous videos, we explored China's weapons, like their control over rare earth minerals and their ability to endure long-term pressure. But today, we're shifting gears to focus on the U.S. What's in America's playbook to tackle this trade war? I've ranked the U.S.'s biggest tools from the most impactful to the least, and we'll also explore what happens if the U.S. economy takes a hit, because if America goes down, it's not going alone, and it might just export its problems to the rest of the world. So, let's jump in and break down the U.S.'s trade war playbook, starting with the top weapon at number 1. First up, we have tariffs, absolutely no surprise here. Tariffs are the U.S.'s go-to move in this trade war, and they pack a serious punch because they directly target Chinese imports. As of April 2025, the U.S. has imposed a massive 145% tariff on Chinese goods, a number that's been climbing steadily, showing just how hard the U.S. is willing to push. Tariffs work by making Chinese products more expensive for American consumers, which can force companies to source elsewhere or bring manufacturing back to the U.S. But there's a catch: tariffs cut both ways. They can drive up prices for Americans, fuel inflation, and hurt U.S. businesses that rely on Chinese imports. For example, Apple, which assembles 90% of its iPhones in China, is feeling the heat. Economists estimate that these tariffs could cost the average U.S. household about $1,300 this year, and imports are projected to drop by $800 billion in 2025, that's a 23% decline. Despite the risks, tariffs are a direct and powerful tool, and they could theoretically go over 9,000% if the U.S. wanted to escalate even further. Because of their immediate impact and scalability, I'm ranking tariffs as the U.S.'s number 1 weapon in this trade war. Moving to number 2, we've got the U.S. dollar and its dominance in global trade, particularly through dollar oil trade. The dollar is the world's reserve currency, and that gives the U.S. unparalleled power. Most international trade, especially oil, is settled in dollars, making it the backbone of the global economy. This means the U.S. can influence markets just by leveraging its currency. For instance, if the U.S. imposes sanctions or tariffs, China might try to devalue the yuan to offset the impact, but the dollar's dominance keeps the U.S. in control. The U.S. can also restrict China's access to dollar-based transactions or freeze assets, putting even more pressure on Beijing. However, there's a wrinkle: recent trade war escalations have shaken confidence in the dollar. Since the latest round of tariffs, the dollar has hit a 3-year low against major currencies, and there's talk of a confidence crisis as investors question whether the U.S. is still the ultimate safe haven. Even so, the dollar's role in global trade makes it a massive weapon, which is why it's number 2 on our list. At number 3, we have non-tariff barriers, or NTBs. These are the less obvious but highly effective tools the U.S. uses to make life difficult for Chinese imports without relying on direct taxes like tariffs. Non-tariff barriers include export controls, which the U.S. has already deployed against over 50 Chinese tech firms, particularly in AI and military technology. These controls limit China's access to critical U.S. tech, slowing their progress in key sectors. Other NTBs include stricter regulations, licensing requirements, or safety standards that disproportionately hit Chinese goods, like new environmental rules that conveniently block Chinese products. The U.S. can also use legal measures, such as accusing Chinese companies of intellectual property theft, to block their products or impose hefty fines. NTBs are powerful because they're harder for China to retaliate against. You can't tariff a regulation, after all. They're less immediate than tariffs, but they're a strategic long-term play, which is why they're ranked 3rd in the U.S.'s playbook. Coming in at number 4, we have the U.S.'s dominance in key industries, particularly technology, AI, and innovation-driven sectors. The U.S. is the global leader in several critical industries, and that gives it a massive edge in the trade war. Take technology: companies like Apple, Microsoft, and Google are American giants, driving global innovation. The U.S. also leads in AI, with firms like OpenAI and Shy pushing the boundaries of what's possible. This dominance allows the U.S. to set global standards, control intellectual property, and maintain a technological edge over China. For example, the U.S. can restrict China's access to advanced chips or software, which hampers their ability to compete in tech-heavy industries. This isn't just about economic power, it's about shaping the future of global innovation. However, This advantage is more of a long-term strategic play rather than an immediate weapon, and it can be undermined if allies start looking elsewhere for tech due to US tariffs. That's why I'm placing this at number 4, but it's still a critical part of the US's leverage. At number 5, we have the US's alliances and global influence. The US isn't in this trade war alone. It can rally allies like the EU, Japan, and South Korea to put pressure on China. For instance, the EU is exploring trade deals with India to counterbalance China's influence, and the US can encourage ASEAN countries to deepen economic ties with each other instead of China. This diplomatic leverage can shift global trade flows away from China over time. But there's a problem. US tariffs have also targeted allies, with 24% tariffs on Japan and 25% on South Korea, which risks alienating them when the US needs their support most. Alliances are a strong card, but they're not being played as effectively as they could be, which is why they're at number 5. Number 6 is the US's domestic market and economic size. The US economy is the world's largest, accounting for about 13% of global imports, and that gives it significant leverage. China relies heavily on access to the American market, and the US can use that dependency to force concessions, like threatening to shut off market access entirely. But this is a double-edged sword. The US also depends on imports. Think of all the consumer goods, tech components, and auto parts that come from China. Tariffs and trade barriers hurt the US too, with rising prices and supply chain disruptions already causing headaches. So, while the US's economic size is a weapon, it's less flexible than the others, landing it at number 6. Finally, at number 7, we have a strategic play the US has used before, exporting inflation to other countries and industries. Historically, the US has managed its economic challenges by pushing inflation onto other nations, like it did to Japan in the 1980s, China in the 2000s, and even the EU during various periods. How does this work? When the US faces economic pressure, it can print more money or manipulate its currency to devalue the dollar, which makes US exports cheaper but increases the cost of imports for other countries. Right now, with the trade war heating up, the US is aiming to export inflation into industries like technology, AI, and even cryptocurrency. This could explain why crypto might see a big bull run in the coming months. Here's the plan. If the US strikes a deal with other countries to buy back US bonds, it can print more money to pay for treasuries coming to maturity. Then, if the Fed starts cutting interest rates, which some analysts predict could happen by mid-2025, the dollar weakens further, inflation spikes globally, and investors flock to assets like crypto as a hedge. Bitcoin and other cryptocurrencies could soar as a result, especially if global confidence in the dollar keeps slipping. This strategy lets the US offload its economic pain onto others, but it's a risky move that could backfire if global markets lose faith in the US entirely, which is why I'm ranking it last. Now, let's talk about the bigger picture. What happens if the US goes down in this trade war? Because if America's economy crashes, it's not just the US that feels the pain, the whole world does. The US holds the most dollars, of course, but it also holds a massive amount of global bonds. US treasuries are still the world's go-to safe asset, even with confidence slipping. If the US economy tanks, we could see a huge liquidation of those bonds as investors panic and rush to cash. We're already seeing signs of this. Since the tariff war escalated, there's been a sell-off in treasuries, with yields spiking and the dollar hitting a 3-year low. Some experts are warning of a confidence crisis in US assets, which could trigger a broader financial crisis. Gold, meanwhile, has been hitting record highs. Investors are flocking to it as a safe haven, with prices reaching $3,167.50 recently. And here's a key point. The Federal Reserve holds the largest gold reserves in the world, with over 8,133 metric tons as of 2025, giving the US a significant buffer in a crisis. But even with all that gold, it might not be enough to shield the world from a US-led downturn. If the US goes down, global markets could lose trillions. US stocks have already shed $5.4 trillion in value in just a few days this month, and we could see a domino effect: recessions in Europe, Asia, and emerging markets, oil prices crashing, and a freeze in global trade. The US might hold the most cards, but it's playing a high-stakes game where everyone could lose. So, there you have it, the US's top 7 weapons in the trade war with China, ranked from tariffs at number 1, to the dollar's dominance, non-tariff barriers, leadership in technology, alliances, economic size, and the strategy of exporting inflation. But as we've seen, even the strongest tools come with risks, and if the US pushes too hard, it could spark a global crisis that no one's ready for. What do you think? Does the US have the upper hand, or is this trade war a losing battle for everyone? Drop your thoughts in the comments below, and if you found this breakdown helpful, don't forget to like, subscribe, and hit that notification bell so you don't miss our next video on the FluxFolio Finance Channel. We'll be diving deeper into the global fallout of this trade war, so stay tuned. Thanks for watching, and I'll see you in the next one.